Over the past decade, the stock market has received all the attention and praise from investors, and with good reason. Over the past decade, the stock market has been one of the biggest wealth creators and one of the biggest benefactors of loose and accommodative monetary policy of central bankers and governments across the globe as they worked vigorously to fight deflation. Now, these central banks and governments are faced with a new threat, the threat of inflation. And this is a game changer for central banks, for monetary policy, market cycles, and more importantly, for the way investors may need to diversify and allocate their investments to continue to build wealth over the next handful of years. With these seismic shifts, savvy investors are starting to ask, what are my alternatives? And what if the stock and bond markets go into periods of stagnation like they did in the 70s or even the lost decade in the 2000s? Where else can I consider investing to get income and growth if I'm retired? Welcome to Quiver Financial's Investors Know Your Alternatives. I'm Colby McFadden, and I'm joined with Justin Singletary, Patrick Moorhead. Gentlemen, as you know, the past year there's been incredible changes, big shifts. Decades-long changes happening. We had a decade-long bull market. Things seem to be shifting. We got all this inflation going on, worries of reflation. We got all this inflation going on, worries of recession. And it's like the genie's out of the bottle. Like the central banks worked so hard for so long to create inflation, and now, boom, we've got it. And now they feel like it's out of control, right? That's what you're reading. That's what you're seeing. We're getting all kinds of questions about, in this landscape, what do I do? Because the last time I checked the history books, things like inflation and recessions, they usually aren't very kind to investors. And if we gauge that by the stock and the bond market, which is what everybody's invested in, right? Like what have people done the last 10 years? They've piled into stocks and bonds. And if that's how you judge whether it's a bear market or bull market, what do you do now? If stocks and bonds aren't the wealth creator, potentially not the wealth creator of the future like they were in the past, what are the alternatives that we as investors have if we want to create income, if we want to see growth in our portfolios? So let's first start by talking about what an alternative investment is, give people some examples so they have just a high-level view of what we're talking about.
Yeah, and you say that, check in the history books. Back in the day, alternatives weren't alternatives. They were the norm. It was stocks and bonds that were really the alternatives. As the stock market started generating and everything, they were really, for the wealthy and in that type of regards. Nowadays, put it simply, an alternative is an investment that puts money in the investor's pocket rather than in Wall Street's pocket. And that's why Wall Street kind of bashes them, because they don't get any of that revenue. They don't get any of that, profit, income, or things like that. So it's any type of investment that is not correlated to the stock market. We kind of alluded to it. It's real estate, it's doing loans, it's businesses, like private equity and things like that are pretty common in the alternative space.
Yeah. So basically in the alternative space, you have anything from private equity. People consider real estate an alternative.
Yeah. Mortgage lending, becoming a bank type of deal.
Yeah, venture capital, another one.
Venture capital, okay.
Yep.
And so what you're talking about, Patrick, is basically just that there's the main focus of an alternative is the lack of correlation to the stock market's ups and downs or the bond market's.
Well, that's how mainly that Wall Street identifies it. Yeah, sure. That it's not tied to the stock market. So if in this bear market when everything's going down in the stock market and Wall Street's crashing, typically the alternative investments are going to keep performing. They're not going to have the effect if it trickles down into the economy, then that's where it's going to have an effect. But if the stock market fluctuates, your alternatives won't fluctuate with it. They're going to have their own little sector industry fluctuations.
Got it. You mean like the price of the investment is
yeah.
going to be more stable as there's greater volatility in things like the stock market,
right.
Things of that nature.
Yep.
Okay.
Although with way inflation is particularly real estate investments might be a little bit getting some of that impact.
Sure. I mean, I'd imagine like all investments, you still have to do your due diligence and be smart and tactical and strategic in the sense that there's times, a lot of people consider gold or metals, right? A commodities, an alternative. And there's times to own that and not. And that's the number one factor that investors always have to consider is that when they hear people talking about things is, okay, is it the right cycle? Because as you mentioned, Patrick, earlier, alternatives was what people used to always do. Like in the 70s, that was the only way of investing because it was hard to get access. Stocks for the rich people. Right, and now that seems to have flipped, where stocks and bonds are for the everyday average Joes, and now these alternatives are for the rich people. Yeah. So I mean, so outside of the correlation factor, how can an alternative help in an investment portfolio? Like how can it be used inside of an investment portfolio in times of inflation or recession if somebody's trying to create income or growth?
So reduced correlation, biggest one, like you'd mentioned. So you don't have that direct tie. The only problem is it's illiquid. But yeah, you can create cash flow, get more market depth and breadth with to a portfolio's diversification. And sometimes the returns can be substantial in a certain period of time or window of time.
If you nail the right one, like everything. I mean, it's the what if game, right? But go ahead.
Well, typically they have tax benefits, associated to them, especially the real estate side and stuff like that. And as we talked about at the top about inflation, real assets typically keep up with inflation, so they're an inflation hedge. To whereas the stock market is getting hammered with inflation and things like that.
Yeah, I mean, like I've always been concerned, like with some of the alternatives, because sometimes there's such big minimums. Like you have to have that is really just for the uber wealthy and the rich. So are there ways that you can invest so that way you don't have to put big chunks of money? Can you build a small portfolio of alternatives? Let's say you have $100,000. Can you build a portfolio of alternatives of $10,000 chunks of different